Okay, so I'm recording this video after close of trade Friday, the 27th of August 2010, and I thought we'd get a little bit of a bounce today, and we certainly did. We closed up almost 20 points, and the range high to low was about 27 points, 2.2 million contracts traded, and it ended up being a kind of exhaustion climax up bar, similar to the one that we had on the Wednesday. Then we had this kind of reversal down bar on the Thursday, and now we've kind of had another one here. We're kind of closing in on this gap here, and looks like we're going to be closing above this cyclical support level, maybe Monday, maybe Tuesday. So, if that's the case, it's likely that this uptrend is going to continue for a little bit of a while. So, don't particularly have a feel for what the direction is going to be on Monday. We certainly had kind of pretty extreme kind of selling activity early on Friday, which I'll show you on my charts, and then kind of extreme buying coming into the close on Friday. So anyway, it was a good call on the Thursday evening, and I'm glad we kind of had this bounce. And I'm just going to roll through my charts, show you what I was seeing. This was the close on Thursday on this 40,500 tip bar chart. This is the highest time frame tip bar chart that I look at, and you can see we were forming a cyclical support level here with kind of Rambo pattern forming in the after hours session here. Rambo, potential reversal of a lambda breakout. We kind of came back down though through 10:40 early on in the first half hour of the day, and then we kind of spiked through there and just rallied continuously from there. It's kind of stopping volume pattern. There was extreme volume kind of going through at those lows. I think everybody was thinking that this low was going to be taken out and we're going to go into a serious downtrend, but we ended up kind of hitting a whole bunch of stops and then just rallying from there. And you can see here, better momentum showed a flush trade here. And again, apologies that I've not released this code yet. Still kind of just tweaking it to till I get it right. But what it shows is that the amount of selling was pretty extreme at this point here. It's more selling that we had than we had on the bullish divergence patterns here, but it's less selling that we had on the exhaustion selling signal down here. So it's often a good signal for flushing out the end of the sellers or buyers. Kind of you get similar patterns on uptrends or downtrends, and then from then the market kind of is allowed to rally because all the sellers have sold at that point. So this ended up being a very good kind of support level for the day, and we're coming into another kind of cyclical resistance level on the better sine waves. Not signaled yet on this time frame, but it's going to be coming up in the next couple of bars. So the question is if we're going to keep on going through there, or if we're going to kind of just pause. Professional bars at the end of the day, but remember that's kind of close of the day plus end of the week, so there's going to be a lot of kind of professionals profit taking and just people getting out of the market. A couple of stopping volume patterns, so we're certainly finding some resistance up at those highs though. So it's not signaled a climactic buy signal at this point. So I'd assume the rally is going to continue, but we may get a little bit of a pullback on Monday. And then just talking about this resistance level, when I look at the highest time frame tip bar chart, the 40,500 tip bar chart, that's what I was talking about on Thursday. This is the close of trade Thursday, the open of trade on Friday. We had an end of trend warning signal here. We had this kind of similar signal, a flush signal on the 4,500 tip bar chart. After we'd had our kind of climactic selling down here, a couple of flush signals down at this 1042 level. And then we had the news release, the GDP numbers kind of came out, and I thought they might be better than people expected, just because some of these things were starting to line up, and you can see that on Thursday's video. But we immediately kind of came into resistance here at this 1055 level after we had this is the spike where the GDP number was announced. We just kind of came into resistance here. All these kind of bearish divergent signals here in the market kind of sells off. Then we come into these low extreme selling, climactic selling at this point here. Just below 1040, and then the market rallies for the rest of the day. And so again on this time frame, we've come into an end of trend warning signal here, but we've closed above that, and we've got all these kind of professional bars up at these highs. In terms of divergent signals, yes, we've got bearish divergent signals coming up on better momentum, but these bearish divergent signals are best when they're down by the zero line, showing that there's real kind of equilibrium in terms of buyers and sellers, and that's when we get trend changes. There's still a good amount of buying taking place at these levels here, so I think we're probably going to keep on going a little bit further, but kind of wait and see, if you like. And then just going down to my kind of day trading charts to just show you what was happening on some of those time frames. First of all, just show you the 500 tip bar chart around the open of the day. So the first kind of end of trend, we kind of this was where the news kind of came out. So we were 1049 up at this level here. We pulled back in an uptrend, and everything else was kind of looking bullish, and we were just sitting underneath this kind of resistance level here. Then the GDP numbers came out, and we spiked immediately through this end of trend warning signal. There was nothing else around this end of trend, this cyclical kind of turning point, that showed any kind of, there wasn't professional taking prior to that, wasn't any bearish divergence kind of prior to that end of trend. So we just spiked through this. We came into a pullback level here. You can see the amateurs kind of down at this point here, expecting the decline to continue. Doesn't, stops at this pullback level, keeps on going, and that was kind of the high pre-open, which is the end of trend warning signal. Again, climactic buying, professionals up at this point here. We came back to test back up at the 54 level after the open. All these professional blue bars at the beginning of the day, bearish divergence. There's our flush signal here, and the market kind of keeps on going down. When I look at the 1500 tip bar chart of exactly the same activity here, this is the open at that point here. You can see that we were just kind of above 49. We were just kind of sitting around this kind of cyclical resistance level here, and that was the GDP announcement here. Kind of came into these highs. We had a pullback on this time frame, end of trend right at the open. So we had all these things kind of lining up on the open, that we'd had our exhaustion buying, climactic buying, end of trend warning signal on these time frames. Then the market kind of takes off to the downside. On the 1500 tip bar chart, we kind of came into the lows here. So you can see here's the climactic selling at this point here, and we kind of continue making these bullish divergence signals. There's less and less selling going on as the market kind of reaches new lows. Final push down, you can see this push down beautifully here when we kind of went spiked below this 1040 level here. There's a professional bar right on those lows there. We came back to the pullback level, and instead of the pullback kind of holding and then forming an end of trend warning signal, because this spike was so extreme at this point, we just continued on through the pullback level into an uptrend and kept on rallying for the rest of the day. When I look at the 500 tip bar chart, we had a couple of pullback levels which were quite important, but the thing that's common in all of these pullback levels is all the amateur activity here. Not a perfect one there because the amateurs are kind of on the down bars here, but here's a perfect one with a little Rambo signal here. So the amateurs are kind of starting to say, oh, well, that's a double bottom here, the downtrend's over, we're going to continue to rally forward, and the amateurs kind of get wrong-footed here as coming into a cyclical turning point, and then we continue on down. Similar one, this one coming back into this cyclical support level that turns into resistance at this point. The market kind of comes back, but the way those amateur bars are placed is not as perfect as this one here. And then coming into this final pullback and end of trending warning signal here, you can see at these lows again Rambo patterns here, bang bang. Amateurs coming into this turning point saying, this down move's kind of had its day. No, it's not the case. Come into a pullback cyclical resistance level, and then we come back down to form finally an end of trend warning signal. And here we go. Here's our second cyclical turn after an end of trend warning signal here. Spike down, professional blue bar. The amount of selling that we have didn't generate a flush signal here, wasn't greater than we had, but it was pretty substantial at this point. And then when we bounce from there, kind of a V reversal, kind of goes the other way. And then we start to break into an uptrend, and then we're away for the rest of the day. So there we go. That was what I was looking at on my tip bar charts. Just rolling through on the highest tip frame charts, just look at the other signals that we've had on the other markets. This is bond, 30-year bond contract here. You can see that we were kind of maxing out. We'd had a pullback. Because the pullback level was violated a couple of days ago, this didn't print an end of trend warning signal here. But I'm always counting these cyclical turns, and if you own the better sine wave, I'd suggest you do the same. So counting them after a pullback level to a potential end of trend, second cyclical turn after an end of trend, and that is where the market kind of loses steam. We get exhaustion buying at this point here. Having had exhaustion buying previously and bearish divergence signals, final push, exhaustion buying, and then the market kind of collapses. And we've had a similar pattern on the 10-year and the 5-year bond contracts. Crude here, I was talking yesterday how on the better sine wave the lines were starting to diverge and we were just hanging around this pullback level. Well, we still got a little bit of a spike down early on the Friday morning, but then from then we kind of broke pretty substantially, and that you can see the professional blue bars here are breaking through this cyclical resistance level here, and this is breaking it into an uptrend. You have to just watch out where you see these professional bars. Normally, when you're making new highs and new lows with professional bars, it shows that the professionals are taking profits, starting to reverse their positions. When it starts to happen in the middle of a range here, and it's kind of a break into a new high,